This is the FM Gold channel of All India Radio. In the program Money Talk, we now bring you a dialogue on revival of Indian economy. The participants are Ashok Das Gupta, economic journalist, and S. Rangabasham, journalist.
Ashok, the economy has been in problem for quite some time now. We had the recession and then the so-called double dip kind of recession. The entire world has seen that. Now people are, of late talking about an emphatic and a conclusive changeover and towards better times, toward brighter days. If you were to talk about the Indian economy, what would you say? What is the picture as of now?
See, let me put the record straight, correct the situation. You used the word recession. Our economy has never been a recession. A recession is 2 consecutive quarters of negative GDP growth. Now that has never happened.
But we have seen
we have been in deceleration mode for about 2.5, maybe 3 years, but never in a recession. Now what has happened is there is a sort of silver lining that is appearing, and which the finance minister in a recent press conference also exuded confidence with, of course, a bit of cautious optimism that things are definitely looking up. And his prime focus was on the fact that the current account deficit, which is coming down, which had gone very high up, will come down, and he has absolutely committed that it will be contained. In fact, it will be better. More importantly, the fiscal deficit, he has said he could do much better than 4.8%. Now, where does this optimism spring from? One, the dollar inflows that are coming in through the stock market mainly, could be in the debt market also, but the huge quantities coming through the equity market investments, that is because of the high liquidity that is there, stemming from the quantitative easing, which is still flowing. That is why our current account deficit also is being matched to a large extent, much, much better than before. The second thing, which was adding to the current account deficit earlier, was investment in gold. Now, that was the primary concern of the government, and which is why it went on increasing the import duty, from initially, if you remember, from 2% to 4%, 6%, and then 8%, and then 10, 12% it has increased, plus it has imposed a tax to dissuade people from investing in gold. Now, the question arises, why were people investing in gold? That is because of the high inflation. And if you put your money in your term deposit through banks, it's a negative return, because if inflation is 9% and interest is about 9% and which is taxable, you end up getting a negative return. So that was a hedge against inflation, and gold was rising by leaps and bounds, and people jumped into the gold bandwagon. Now that has been absolutely scuttled to a very, very large extent. People are not investing in gold
and
right
now. The policy
now.
of the government has paid off, it seems.
Exactly.
Ashok, let's start off with first things first, GDP numbers. There was a time, 3-4 years back when we were growing by, 8% plus. From there on, it has come down drastically. Isn't that a major cause of concern for the government and also for the Reserve Bank of India?
Now, the Reserve Bank of India itself has said that its earlier projection, they have scaled it down. They have brought it down to something like 4.8% or so. Now, that matches with the World Bank projection, which stands scaled down, 4.8%. IMF is, I think, still a bit lower, 4.7 or maybe lower.
Yeah.
You see, this decimal point increase or decrease doesn't make a difference. The moot point is that it will be sort of 5% or maybe sub 5%. The more optimistic people are talking about 5.5%. Now, that in the current situation is, if it happens, is still very good. For the simple reason that, our investment cycle had almost come to a stop. India, per se, had stopped investing. And there was a sort of crisis of confidence that had taken place. You had high inflation, you had high current account deficit, interest rates obviously had to be high because of that. So everything was turning out to be negative. And with gold imports, your current account, and that was a vicious circle. Your current account deficit is high, so your rupee depreciates further, your import bill, goes sky high. All that seems to have turned around. Things are now looking up. Now, there are still primary challenges. One is, how does the government, in consultation with the RBI, contain the inflationary spiral. Whatever the government has done till now, it has not managed to really curb inflation to the RBI comfort level, which is about 4 to 5%. Because inflation, remember, is a very harsh indirect tax, especially on the poor.
You're talking about inflation. Even the Reserve Bank has been really serious about containing inflation. But many analysts and economists point out that this particular bout of inflation is supply side driven and not demand side driven. So a monetary policy or hiking the interest rate can't be much of a use. So why take those steps and, curtail the investment cycle or have a adverse impact on investment cycle with not much of or at least a commensurate benefit on the inflation side?
You see, this is a debate that can go on for months together. And remember that the food inflation that we have been having for the past 2.5 years has always been pointed to supply side constraints. Take the onion prices right now. When prices started slightly rising, beyond the 20-25 range to 30-35, people were a bit alarmed, but they never in their dreams even thought that it could touch 90-100 rupees. Now, the point is that the farmers, are they getting more? No. The farmers are getting about 14 to 15 rupees per kilo. When it reaches
the farmer is benefiting, not the consumer.
Now, because of heavy monsoon, they say the crop has been affected, and which is why supplies are not coming in from Nasik and down south, Andhra and all those places. The fact is that the production was not so bad as lead to such a price hike. What is happening is that the farmer releases his stocks. The big farmer may be withholding his stocks to get a better return later. At 14, 15 or maybe 16 rupees a kilo, when it reaches the mandi, the wholesaler, it is already touched 45, 50 a kilo. From there, when it reaches the end consumer, it is 70, 80, 90, whatever they can get. Now, supply side constraint is understandable. Then food inflation otherwise is in the protein-rich items. Now the explanation is, take milk, for example. Fodder prices have gone up, so milk prices are raised by 2 rupees a kilo. Chicken, poultry, that is a man-made thing. You can regulate
but Ashok, the hypothesis is also that the standard of living of Indians has gone up, so they are consuming more of protein.
That is one of the explanations.
They are consuming more of protein.
It is a mix of all these. There is an element of supply side constraint. There is an element of higher input costs, be it fodder, be it cattle feed, be it poultry feed, those costs. And then the change maybe in the dietary pattern of people. Now, my point is that if it is a change in dietary pattern with such a high inflation, it is not that people have started earning so much more. Definitely, the demand is more than the production in certain items.
But do you think a monetary policy can have an impact on inflation?
No, not directly, not food inflation. But the concern of the RBI is, and all central bankers is, that finally, as we have seen in the past 2.5, 3 years, when you have very high food inflation, that seeps into manufacturing inflation. How does it happen? If you are a worker and you are facing high food inflation, your wages are renegotiated and you have your DNS allowance
moves up.
So your DA moves up. You have more money coming in. Now, they are paying more. The company is paying more. That is an input cost to them. So they raise the prices of their products.
So you mean to say it has an impact on inflationary expectations at least?
Indirectly, when you have very high food inflation for a longer term, finally you'll find that your core inflation is also going up. And you'll see in the wholesale prices, it has moved up from 6.34 or something to 6.46. Now that trend is bad because winter season, with the expectation of a good bumper harvest, prices should have started coming down, but it isn't.
It's not happening. That's right. You earlier spoke about the investment cycle, but that was, some say, 1.5, 2 years back when, like the industry and analysts were pointing a finger towards the government, the so-called policy paralysis and all. But from there on, the government has taken a number of proactive steps to pump prime the economic situation and the investment cycle. Do you think now that's working and now it's starting to pay off?
It probably has started working. Why? And that is why we have, certain so-called green shoots of the economy sprouting. Now, the FM himself has said that certain corporates have told him that things are looking better. Now, he doesn't say that he has seen it himself. He is told. Now,
but the numbers
this sort of an expectation. The point is that till inflationary expectation remains, things will always remain subdued. When there is a change that no, we have bottomed out, now it is no other way but up, you will find that the economy will start growing, and that is when people will start buying again the consumer durables, car loans, personal loans, housing, all these things. When they revive, you will find the companies have started investing in greater capacities. Right now, some sectors have idle capacities. So that bottoming out is now taking place. And remember that all the steps that the government has taken, which has been overdue and delayed, once they have been taken, it takes about 3 to 6 months minimum for it to take effect. That is the lag time. So the expectation is that maybe in the fourth quarter of this fiscal and maybe the first quarter of next fiscal, you will see a definite upturn. That is the general expectation.
Ashok, earlier you spoke about the Reserve Bank of India. We have a new governor, Raghuram Rajan. Earlier people were expecting a lot from him, and some analysts were also saying that he will take a contra call and think out of the box solutions for the economy. But that doesn't seem to be happening. He's in fact toeing the earlier Dr. Subba Rao's line of action, and he hiked the repo rate as well.
See, that again is a perception. Because a central banker, when he takes the hot seat, he has to think like a banker. When he was in the finance ministry, Dr. Rajan may have been talking from the finance ministry's angle. But people thought that Dr. Rajan, in the first policy review, he'll decrease the repo rate. Instead, he surprised everybody by increasing repo rate. Now, the government didn't criticize that at that time because it was felt necessary. In the previous regime, had Dr. Subba Rao continued and done so, there could have been reactions from India Inc. also. So it is basically a perception. Now, why that happened, Dr. Subba Rao's regime, that the finance ministry and the RBI are not on the same page, and that is why they're acting differently. Right now also, things are looking very different. But people are not saying that they are not on the same page. They're saying they're working in consultation. But all said and done, the major point is inflation should come down, and once that happens, the demand will rise, investment will pick up, but there's still one major concern. The FII money that is coming in through quantitative easing is because of the US stimulus.
And once
that tapers off, God alone knows when. There's confusing signals there also. Some say it will be early, could be December, it could be January, some say it could be April, but all said and done, definitely it will happen sometime.
And
when that happens, when the dollar outflow takes place, there is going to be, again, at least in the equity market, there will be a sort of collapse. And the government has to have other avenues of luring dollar inflows.
Ashok, before we wind up, let's quickly talk about the forex scenario as well. We saw the rupee depreciation threatening to cross that 70 to $1 mark, but from there on it has receded a lot and it's now somewhat stable in that 61-62 band. Moving ahead, what do you expect as far as the forex scenario is concerned?
See, forex scenario, there was a dip in our reserves. Part of it was probably used in the exchange market to halt the fall of the dollar, prop up the rupee. But beyond that, right now, we have again, as there has been accretion in our foreign exchange reserves. It has again gone up to, I think, about $278, $280 billion. So we are in that comfort range, what we used to be. And the major point is that FDI flows need to come in.
Let's hope that the economy pans out in the right direction and the efforts of the government and the Reserve Bank of India pay off. Thank you so much.
Thank you.
You were listening to a dialogue on Revival of Indian Economy. The participants were Ashok Dasgupta, economic journalist, and S. Rangabasham, journalist. It came to you in the program Money Talk, produced and presented by the News Services Division of All India Radio. This program is also available on our website, newsonair.nic.in. You may email your opinion about this program at airnsdtalks@gmail.com.